Hi, everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you the stocks on your screen that'll be featured in this recording. And as a quick reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. Holy cow, what a week. All right, let's get started. And what happened? All started Sunday night. The thumbnail of last week's recording was too little too late from the Fed as far as cutting rates, and it could get ugly. And boy, I didn't think it was going to happen on Sunday night, but that's what happened. Before we get to that, we did have some economic data this week. We had the jobless claims report that came out yesterday, and it was a little bit weaker than expected. So you're wondering, well, if it's weaker than expected, that means the Fed's not going to cut as fast. And the Fed fund futures have been all over the place. There were people coming out calling for an emergency 75 basis point cut on Monday and 150 basis points through the January meeting, not at the end of the year, but through the January meeting were priced in, and it's been moving all over the week. But we're expecting pretty much 50 basis points in September. Let's just leave it at that. But even that's only 50-50, and it's come way down. But the 4-week moving average on this jobless claims report is still trending to the upside. So even though this one weekly report was a little bit better than expected, the 4-week moving average is not. So that's kind of a non-event, I guess, as far as the markets. But what happened Sunday night? Let's talk about that. So to do that, we need to go over and take a look at the chart of the Japanese yen. So when we look at the yen, you can see it had a big move to the upside. You've probably heard all week the yen carry trade. The unwinding of the yen carry trade. What was that? Well, people were borrowing the yen because it was basically borrowing free money. Their rates were so low, and then buying other currencies. And the Japanese government has decided they're going to start raising rates for whatever reason. Now they're deciding it's time. And we're looking at, especially with the jobs report we had at the end of last week, perhaps the Fed being a bit more aggressive on cutting rates. So that trade got unwound. So they were borrowing the yen at very next to nothing, and then earning an interest rate on other currencies like the dollar, et cetera, with interest rates over here in the U.S. And then that trade became unwound, and so many things were tangled into it. It just created this conglomeration of selling. And so we had this big move up in the yen, and that coincided with a big move down in the dollar. So obviously, if you're unwinding that trade, short the yen, long the dollar, then you go back the opposite way. We've been talking for quite a while about this 104 level on the dollar, and would we break it? And break it, we did in a big way. We've bounced back up towards the 10-day moving average here, but that's what caused the big move lower in the dollar. So we don't want this dollar to collapse too much. There's some speculation that maybe the unwinding of that carry trade isn't completely done, but I think the majority of it is. So maybe we have a little bit more heightened volatility. We'll talk about the VIX here in just a second, but I did want to show you that the dollar had recovered a bit, and I think that's important. We want this dollar to stay within a range. We don't want it to go down too far to where it shows that around the world they're losing confidence in the dollar. We need that to be stable. All right, so let's go ahead and take a look at the VIX. And big spike up on Sunday night. And actually, this big spike happened just before the market opened on Monday morning. So we got up to 65 here, all the way back down. And now we're back down around the 20 range, and could kind of joked in previous recordings on, are we going to get to the point where 17.5 becomes support, where it was resistance for so long? And then we blew through that, and now you have to wonder, is 20 going to be support? Maybe not. Maybe we come back down to 17.5. But we got a ways to go to get back in that range where we've been for most of the year, between 12 and 15 or 17.5 on the upside. So big volatility. We still have a little bit of heightened volatility. 20 is not quite that bad, but when you compare it to 12, it seems elevated. So a little more volatility moving forward, I think, is warranted. In fact, while I'm talking about volatility, we actually had a meeting with the data scientists behind this Hub software. And as a quick reminder, if you haven't purchased this software, haven't gone and gotten the software, go to hub.com. You can get it for free. You download it, nothing to download on your computer. It's all browser based, and it's an amazing piece of software. And it just had a webinar this week where they're launching the AI, the stuff that I show our alert subscribers at evotrader.com is coming out soon. And there's going to be a founders group of 200 people because the data scientists don't want everybody to get this. So if you haven't gone to hub.com and registered to get this free software, get it now so you can be on that list to take advantage of being one of those that get the AI signal. So anyway, moving back here, when we look at this potential move back down, in talking with the data scientists, they have a macro chart, some of the data that goes into the searches that I use at evotrader.com, and they're coming together. There's been one other time, so it's only a one sample size of where the economic conditions have been exactly like this. And what you saw after that was choppiness with a little bit of a move to the downside. Does that happen now? We'll wait and see. But that's what shown, and you don't really make comparisons off of a one sample size comparison, but just thought you might find that interesting. So let's get back to the chart of the S&P. So we had this zigzag pattern, and isn't it interesting? We talk about Elliott Wave a lot. I talk about zigzags a lot. Why? Because they work. Look where we opened on Monday. With all that craziness that was occurring Sunday night, we opened exactly at the 161.8% fib extension on this C wave. And then we found support there. And today we closed right dead on the 10-day moving average. So where do we go from here? Well, I think there's two potential moves here in the short term. We could continue this bounce up towards the 50-day moving average and then perhaps get to where that 50% extension level was. So maybe a little bit more of a bounce and fill this first gap. We filled the second one. We filled the one that happened Monday morning already. That one's done. So maybe just a little bit more to the upside, fill this gap, perhaps at the 61.8 or 50% extension levels to the downside. So that would be a little bit more of an upward move. I think we should look at volume when we're looking at this. And you can see that volume has dried up a bit from Monday. You would expect that. But on these bounces, quite a bit lower than the volume that we saw on the selling, but still not horrible. So there has been some buying on the dips coming in here. But one other thing that I wanted to show you that I find interesting, which is another scenario that I think we have to keep an eye on, is this zigzag that's occurred here just in the very short term. And that's this move here from that high. So this is in the C wave. I took it off so there's not too many lines on your chart. So that means that C wave, even though it extended to 161.8, is a complex C wave because there's another zigzag within that C wave. Right now, we're at a 50% bounce, basically, off of that move from where the 0 point is here down to A, which was the Monday bottom. And going back to just general Elliott wave, if this wave 5 is done, which it certainly appears that it is now, it was less than 100%, so you move back to the previous 4. Well, look where that 100% extension is in this current zigzag. It's right at where that previous 4 was. So there's a potential there of a little bit more of a downward move. And I think that could play out if it does look like perhaps the Fed is going to drag their feet on cutting rates. And that's my concern, is that they'll be a little bit late to start cutting rates. So two scenarios, you could make a case for either one, perhaps a little bit of a bounce higher up here. Maybe we even get that B up to 61.8, fill that gap, and then we drift lower. But having that zigzag right where the previous wave 4 is something that's definitely on my mind. So I'm paying a lot of attention to that. Let's look at some of the other markets here in the U.S. And you can see here with the Dow, we moved down. As you would expect, all these charts look the same. Notice that there's a lot of 5-wave patterns that have relabeled. They're gone based on this move. We bounced back up, filled that gap, got right to the 50-day moving average. But notice that the Dow closed below both the 10 and 50-day moving average, even with today's move. And maybe we get back up towards this 400 level where that first gap is here. So that would coincide with that little bit of a bounce scenario on the S&P that I just talked to you about. If we take a look at the Qs, also a move lower, and the 5-wave pattern gone there as well. And you can see we bounced back up, closed also right on the 10-day moving average, filled the gap on Monday morning, haven't filled that prior gap Wouldn't take much more of a move to do that, but we are starting to see some separation here between the 10-day moving average and the 50-day moving average. It's not quite to the point because you can see they stayed separated here, but that goes along with what I talk about all the time, that no security in any time frame gets too far away from the 10-day moving average. You don't see great separation between the 10 and the 50 for very long either. So maybe a little bit more bounce out of the Qs. Maybe they start to get a renewed bid. We'll see. So it's not significant enough to where I feel confident in saying that we could bounce higher, but it's a possibility. So just wanted to throw that out there and put it into the mix. And then the IWM here, we've been talking about the IWM quite a bit during TradeFinder. I'll tell you more about TradeFinder here in a minute. But we had this vertical breakout move from this triangle, and we consolidated pretty nicely here. We did consolidate into an ascending triangle, and you've heard me say this so many times if you've been watching these recordings. Regardless of what you read out on the internet, an ascending triangle does not mean an upward breakout any more than a descending triangle means a downward breakout. Any triangle can break either direction. So we did have this ascending triangle. We were consolidating this vertical breakout move. I don't like it when things go vertical. We got too far from the 10-day moving average. Well, we satisfied that, but we hadn't satisfied the retracement of this vertical move. And what normally happens in Elliott Wave corrective patterns, flat zigzags, and in this case, triangles, when you get a breakout of the triangle, normally you come back and test the point of the breakout. Now, it works the same way as gaps, and most gaps get filled. Most of the time, you come back and test the point of the triangle. We don't know when, though, just like we don't know if gaps are going to get filled right away or if it's going to take some time. Same thing here with moving back to the point of the triangle. But we've been talking about that, saying that, gosh, we're consolidating nicely here, but we haven't yet tested the point of that triangle. Well, we have now, so that's done. Now it looks like the IWM is back in that range between 190 and 210, where we spent most of the year. So until we break back above 210 with follow through or below 190, I think that's the thing that you would look forward to as far as just staying in a trading range on the IWM. All right, let's look at rates. Obviously, rates have probably been crazy with what was going on with the carry trade. And here's the TNX. Now the TNX is rates. I'm going to show you the TLT2, which is pricing. And a big move down here. Thought we would come down to the 161.8 and then maybe hold there. No, Monday, obviously a big move down in rates, but we've recovered that and back to the 10-day moving average. So we got rid of this craziness that occurred at the beginning of the week. So some calming in the bond market side of things. And then looking at TLT. Y'all ask about TLT a lot, and we talk about it quite a bit. And when we're talking about TLT, it reminds me that all you have to do to register for our giveaway, and we're giving away one of our level 3 subscriptions at ewotrader.com each month of this year. And that includes our AI-based time strategy, which I've told you a little bit about, the triangles, which we showed you right there on the IWM, and then also our AI-based time strategy, which works on sideways trades. We do calendars, butterflies, etc., more income based on stocks that have had a big drop. It's worth thousands of dollars. You can see it on our website. So we're giving away one of those every single month. And all you have to do to register is post a comment underneath this recording. Maybe you have a particular stock you're interested in. And oftentimes you guys ask about TLT. So I wanted to show you that. So make sure you register. All right, so back at the TLT, as I said, you all ask about this quite a bit. This is the 20 years, so a little bit longer on the curve. Kind of the same thing in opposite direction of the TNX. So we had these wild vertical moves in the bond market. Rates went down on the TNX, prices went up on the TLT, and this vertical stuff has all been calmed down. We actually traded below the 10-day moving average today and closing below that. So this volatility here with these vertical moves, it's calmed down. So some calming in the bond market. Now we have to wait and see, is all the fallout and repercussions from the unwinding of that carry trade done? If so, then perhaps we get a more normalized market, and maybe we do see that VIX start to move back to the downside a bit. Before I get to the cryptos, I did want to show you USO. And we've been talking about USO a lot during TradeFinder. And if you haven't registered for TradeFinder, you can do it with the link that you see on your screen here. We do it every Tuesday at 1 p.m. Eastern time. We look at the markets, we look for trade ideas, and we have a live Q&A. It's a great community. It's free, so all you have to do is click on the link and register. And oh, by the way, in this week's TradeFinder, the case study consideration that I gave out was this USO. So taking a look at the chart, you can see where we were on the USO on Tuesday. And I said, okay, we're too far from the 10-day moving average. I expect us to bounce back up towards 75. That's it. You can find it on the hub.com page. If you register for the software, you can go into the social media side of it and you can see it. And register for TradeFinder, you'll be able to see it there as well. But it happened in one day, basically. So the very next day, back right up to 75. That was an area of support. The point of this expanding triangle that we broke to the upside, came back down. We got a little bit oversold from the 10-day moving average. We were at an area of support there from June. And so that was the case study consideration for the week, and it worked out really well. So again, another reason to join TradeFinder and be with us next week. All right, let's take a look now at the crypto world. And even Bitcoin got a bit crazy with what happened on Sunday night. You can see a rare move back below 50,000. We hadn't been there for a while. We had mentioned a few weeks ago that if we broke below the 60,000 level, we'd probably come down to 52,000, which we did. That line's still there. Then we went up and tested 70,000. Wild moves going on in Bitcoin lately. And then back down and got below 60,000, which was concerning. And then Sunday night happened. And Bitcoin goes below 50,000, which turned out to be a great buying opportunity. It looks like. And then back we are up, touched the 50-day moving average, and now we're settling in right around that 60,000 level. So all that wild stuff seems to have calmed down, and here we are right back at 60,000 where we were going back towards the end of June. Looking at Ethereum has not recovered quite like Bitcoin has. It definitely got hurt, breaking below even 2250 on Monday morning. But it's come back up, and you can see we really haven't quite made it back to the 10-day moving average yet, but we are starting to see that separation that I talked about between the 10 and the 50-day moving average. So if you're a crypto fan, maybe a place to look is Ethereum. So it hasn't had the bounce back as Bitcoin has, as I mentioned, and we're getting a little bit into oversold territory here on Ethereum. So that might be a place for you to take a look. Now let's look at the metals. And that was an idea or something that I looked at on Monday morning to see if is there real panic setting into the market with this unwinding of the carry trade. If there was, then you would have likely seen a big bid in the metals, and we didn't get that. In fact, SLV went down with the market, and we've surmised whether it's just that silver is now tied to the technology sector, which is correcting, as you know, because so much of technology uses silver now. We didn't quite make it back to this previous four. And the concern that I have here is even though we got awfully close, the wave 5 ended just below 100%, 80% extension. So that does mean you're looking for a retracement back to the previous four. And you could look at that and say, that was pretty close. I can just tell you the majority of the time, we do come down and touch those lines. Nothing's 100%. Nothing happens every time. But usually you do actually come down here. So I guess my point is I'm not quite sure we're done going down in SLV. Maybe we are, but we haven't even gotten back above the 10-day moving average yet. So I still hold out the possibility that we see 24 on SLV. If we look at GLD, we did get a little bit of a bid, but not what you would have expected. Once again, if panic was setting in on Monday morning, we actually came down a little bit here. And the other issue here is with GLD, we haven't quite made it back to the point of the triangle. Same thing I was talking about with the IWM. Once again, right here, we got close, but normally we make it all the way back there. So I'm a little reserved on this bounce up in gold here. Something else to take a look at here on the GLD is we're forming a bit of a triangle here once again in GLD. So we just had one that broke out, and after that big move to the upside, now we're consolidating once again into a triangle. So does this one break down and we hit that point, or do we break up again? We'll just have to wait and see. You don't pick a direction when you have these triangles. You just are aware that something's going to happen and it can move in either direction. I did want to show you UNG because we kind of called this one. Notice that we were in a wave 3 And one of the things that we do in the AI impulse strategy is trade the zigzag pattern within a wave three. Almost every Elliott Wave person agrees that wave three is the strongest of all waves. Elliott himself said that, but they say stay away from it because you don't know when the wave three is going to end. And my point has been if you have a zigzag within the wave three, it's a great trading opportunity because you do have an idea of where the wave three is going to end and you're trading in the strongest of all waves. However, with UNG, there was no zigzag pattern. It was just a straight mono wave down. And when that happens, it is difficult to figure out where the wave three is going to end. So my comment was, I don't know where the wave three is going to end, but I feel like once it does, we're likely to at least come up and test 15 because 15 acted as support for so long earlier in the year. So breaking that level seems like we would want to come up and test it, and it looks like that's underway. So we've bounced off the lows, at least for now, on the wave three. We'll see how far we can bounce here on UNG if we get back up to that 15 level. Some other stocks of interest that we talk about quite a bit here. NVIDIA. Many of you have asked about NVIDIA. You asked about it last week, so let's take a look at it again. And NVIDIA is at a really strong inflection point, in my opinion, right here at 100. It needs to hold 100. Now, we broke below it on Monday, but got back above it into the close and stayed there the rest of the week. You can see we didn't really just barely trade above the 10-day moving average here. So we're below the 10-day moving average, but 100 is not only that big round number, but there's a gap here just below it. So if we do break 100, we don't have to go down there because we covered that off on Monday morning. We filled that gap. So, talking about, the zigzags and gaps and retracing triangles, all these rules that I talked to you about, it occurred on Monday. That gap was filled. So we don't have to worry about that. So now the question is on NVIDIA, can we hold 100? I think you just have to kind of be patient here on NVIDIA and see if that 100 level holds. If it doesn't, then we could be talking about something further down here, maybe even all the way down to 80. But for now, 100 is key on NVIDIA. Intel, not good after the earnings report there. And once again, notice that a lack of Elliott Wave 5-wave patterns here with all this volatility. So everything is in corrective mode. And if you follow Elliott Wave, Elliott really liked the corrective patterns. He thought that they were even more accurate than the 5-wave pattern. So this is all important when you see these things. But a big gap down here. And now we're all the way down here at just under 20 on Intel. Getting some separation here between the 10 and the 50-day. And we didn't really get much of a bounce back towards that 10-day moving average, which kind of surprised me over the last couple of days that we didn't at least come back towards that 10-day moving average. So maybe we get a little bit of a bounce back up here, an oversold bounce, but that's all it is. I'm not saying that it's time to go significantly long Intel. I don't think you can do that until it gets back above 30. I think we that was such an area of support. And now that we've broken it, on any bounce, it's going to be resistance. So to be significantly long Intel, you got to wait till it gets back above 30. But on the short term, perhaps you could look for an aggressive short-term bounce trade up back towards that 10-day moving average, because following this big drop, which, by the way, this is an exact example of what shows up on those time strategy trades that I mentioned in the giveaway. When you have a stock that has a big drop, I've just noticed over time that they tend to go sideways. And now with the AI infusion giving us a score on the likelihood of staying in one standard deviation. So there's a good explanation of what that is. So again, please leave a comment under the video. I do think that there's perhaps a little bit of a short-term bounce in play here for Intel, but I wouldn't look much past that. SMCI, we've talked about that one numerous times as well. We were saying that it was holding around this 800 level. On the fact that there was so many whispers they could be the next for one of those big stock splits. But if we broke this level here, then we could be coming all the way down here to 500. And there's the line that I've drawn in the past and showed it. And look exactly where we went. So we did break 800. So forget the chatter about a stock split. Who knows if they even will now, as far down as we are. But you can see a big move lower here on SMCI. 500 was the level of thought that we could see. And we've traded there the last 3 days. Also starting to get separation between the 10 and the 50-day moving averages here. And we still have separation from the 10-day moving average. So maybe a very aggressive short-term bounce higher on SMCI as well. So a couple opportunities there. But I just want to highlight these are short-term. And When I talk about that, I'm talking about 1 to 3 days. These oversold trades can rectify themselves very quickly. So I'm not saying that SMCI is a buy all the way back up here. Maybe at some point we come test this resistance level, but that's not what I'm focusing on right here. And in things as we do with what's going on with India, because they've been bucking the trend for a while, but now the India market gave in a little bit on Monday, has come back up. And one thing I wanted to note here is that we are developing a bit of a triangle here on the Indian market, at least on the INDA. You can see right there, not the greatest of triangles, but a little bit of a formation there. So perhaps we're going to get some sort of a move. I did want to note also that wave 5 moved over here. Remember, we'd been talking about this extension so high. Rarely do we see an extension go to 261.8% fib extension. I've seen it a handful of times in 20 plus years of trading Elliott Wave. But we wanted to see if this wave 5 moved over or if it relabeled to a 3. Well, it moved to a 5. So that could be the end of it. Maybe 57.5 was the end. We'll see how the INDA handles the breakout of this triangle. If it break out, then we're going to be right back up to 57.5. And if we come down, maybe we have a corrective move back down to where this support was above 52.5. So keep an eye on what's going to go on, whether you trade the INDA or the Nifty. So thanks as always for your attention. Hope you have a great weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.